It is basically the number one. It is the number one source of credit or leverage in the world for everybody all the time. And once you understand it like that, you see the volatility and the performance are a feature of the engineering and the technology.
Bitcoin is the ultimate compounding machine for long-term wealth in a digital age. That's the latest word from Michael Saylor, the executive chairman of MicroStrategy. Over the last 21 years, Bitcoin has consistently outperformed every major asset class. Saylor believes that with an annualized return of around 30%, it stands as the most robust vehicle for preserving and growing wealth. What makes this performance even more impressive is that these returns stem from its unique properties, absolute scarcity, decentralization, and increasing adoption. Make sure to stick around until the end of the video.
The real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are two powerful promises for the first time in the history of the human race. No one ever gave you those two promises ever before now. Build your house on a firm foundation. Don't build it on sinking sand. Don't build it on a swamp. Build it on a granite rock, on schist. And I guess if I could give the math, the risk-free rate of the dollar, if you're capitalized on US dollars and you were to say buy treasury bonds, the risk-free rate is something close to SOFR, or the standard overnight funding rate. And, that ranges. But after you get paid that rate and you get taxed on it, you might get paid 5%. You get to keep 3% after tax. Maybe if you're tax-free, you get 4.5%. And if you're taxed, you get 3%. So the risk-free rate of return of your capital on that dollar standard is like in the 3% range. The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I've got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30% plus the risk premium plus the tax efficiency. If you told me here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand, if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. Well, the dollar is zero ARR, zero volatility. That is to say, the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So if you're on the dollar, you're living in flat land, and you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%. So like a decade. But you can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking, my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months. if they just hold on to it, right? And so they're going to double it once, twice, three, four times at that rate, right?
The U.S. Securities and Exchange Commission has approved the hashtag NASDAQ Bitcoin and Ethereum Crypto Index ETF. This ETF allows investors to gain exposure to Bitcoin and Ethereum without directly owning the assets. By tracking an index of crypto-related assets, it provides a regulated and diversified investment option, making crypto investing more accessible to a broader audience. This approval is a positive step for Bitcoin and the wider crypto market. First, it increases institutional credibility by signaling regulatory acceptance of Bitcoin and Ethereum-focused financial products. With traditional investors now able to participate through a trusted ETF, it builds confidence in crypto as a legitimate asset class. Second, the ETF could drive significant capital inflows into Bitcoin. As more investors buy into the fund, demand for Bitcoin-backed assets may rise, potentially boosting Bitcoin's value and adoption.
The volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view. And if it is that useful, then a Bloomberg jockey in Singapore is going to raise $20 billion in capital, and they're going to make it available for you to trade on Saturday night, or they're going to make $10 billion of credit available to you on Sunday morning because they're getting paid an obscene fee to do it. And once you understand the asset's appreciating because it is thermodynamically sound and it represents a lower, more efficient energy state for capital or for money. And once you understand it's volatile because the network is more useful and more leverageable, it is basically the number one. It is the number one source of credit or leverage in the world for everybody all the time. And once you understand it like that, you see the volatility and the performance are a feature of the engineering and the technology. They're not a happenstance. They're not accidental. They're going to continue in the same way that water will flow downhill. And, just like the normie that sees a fire and it's like, I'm going to harness the fire and I'm going to sell it. And the normie goes, well, what if the fire goes out? And the engineer goes, I'm actually going to create a machine, an internal combustion engine with 8 cylinders, and the fire's not going to go out. And don't you see how the 6-year-old Boy Scout, like the fire goes out, and then Henry Ford creates a machine such that the fire doesn't go out? And when you get on a jet airplane and fly across the Atlantic for 12 hours, do you realize that your life depends upon the fire not going out in the jet engine, and you're surely dead? You will freeze to death before you happen to suffocate should that fire go out. And engineers solve that problem for you. And so the difference between fear and risk and anxiety and competence and commitment is understanding the physics and the engineering of the money involved. I'm not saying 100% of long-term capital becomes Bitcoin. What I'm really saying is long-term capital is like 450 trillion. I think there's 3% entropic lapse. There's 3% loss in that capital every year, either due to inflation or entropy, whether it's a financial asset or it's a physical asset. And that works out to 13 to $15 trillion a year of inefficiency. And that's just people or institutions owning things, and the building falls down, the company fails, right, et cetera. I think I would liken it to, all the water's in the lake and all I got to do is carve a channel and the water's going to flow downhill. And why? Because that's just the law of physics. If I took all your money, I don't know, how much of your money do you have stored in a bank in Africa right now, Tom? What percentage of your wealth? What if I took it? Zero. What if I took it all? What if I'm Dr. Evil and I took all your wealth and I moved it into a random bank in Africa, And then I said, hey, April Fool's, Tom, I moved your money here, but here's the key. You can leave it there or you can move it back to the US. Would you leave it there or might you move it back?
I would be moving it back.
Yeah. But so would I have to force you to move it back? I mean, wouldn't there be a natural tendency on your part to move the money to a place where you feel more secure with the money? Like human nature is such that there's a lot of people in the world. Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so. Right? The reason there are capital controls, there's a limit of $50,000 a year, is because if people could, they would. So there's a natural tendency of people to want to move their capital from a less secure, more chaotic, more uncertain place, maybe where their property rights are less. I mean, you remember remember in Cuba when the boat people, when everybody wanted to leave Cuba and come to Florida, right? People generally want to move from the less secure to the more secure place. They want to move their person, they want to move their money, etc. It's human nature. I think if we come to this siphon analogy, well, there's just so much energy that gets released when you move from an uncertain, unsafe environment to a more certain, safer, more sound environment. That sometimes you don't have to convince people. Like, for example, a lot of times, if the head of the household could leave a war zone, don't you think they'd bring their entire family with them? Like, the kids might not want to go. My dad made me go to places I didn't want to go. You know why when I was growing up? Because his job. You know, how many children go to a place they don't want to go because their parents get a job? They're chasing money, Tom. So people, why did everybody come to the New World? Money. You know, everybody comes up with different ideas. It was all about property rights, and property rights was money. That's why the DuPonts came. That's why everybody came. So generally, you will find, why did people go west? Money. They went west for land. They went west for property. So if you come back to MicroStrategy stock, well, MicroStrategy capitalized on Bitcoin and our stock started working. So people started buying the stock and it was volatile. Well, it's so volatile that we have $100 billion options market that's formed on top of our stock. So our company went from $1 billion market cap to $100 billion market cap in 4 years. Our options market went from 0 to $100 billion in 4 years. Our volatility went from 20 or 15, very low vol, to 120. Okay, you can look at that as a negative or a positive, but here's the positive. 120 is like hot money. It's like fast RPM. It's only risk if the volatility comes from doing risky things, if it comes from gambling or doing stupid things. If I go into a casino and I play a game where the odds are against me and I'm winning, well, I'm also going to be volatile, but I'm volatile by taking risk, maybe stupid risk. But if I build a centrifuge or a flywheel and I spin it really hard, I might be volatile. It might look volatile to someone that doesn't understand polar geometries or doesn't understand physics, but it's not risk. It's just a machine that's creating motion or kinetic energy. So when MicroStrategy created that 120 vol, and to be clear for your listeners, to put that in perspective, if you stacked up all of the S&P 500 companies, 120 vol would mean you're the number one most volatile company in the S&P index.
This volatility is engineered into its design, driven by Bitcoin's thermodynamic efficiency as a system for storing and transferring value. Much like how engineers turn fire into engines and jet propulsion systems, Bitcoin's design harnesses volatility to drive growth, liquidity, and opportunity for users worldwide. With that being said, Michael stressed that once you grasp that Bitcoin's performance and volatility are intentional features of its financial and technological architecture, you realize this isn't an asset to fear, but one to understand and embrace. Bitcoin operates like a perfectly designed machine. Its energy-efficient, scarcity-driven system ensures its reliability and long-term dominance, making it the ultimate tool for capital efficiency in a modern world. Don't forget to like and subscribe, and let's keep this bull run going.